Gold next on Mirror Business FM here on the Morning Drive, and we are joined by the Managing Director of Business Development, Middle East and Asia for Monetary Metals, Jeff Rhodes. Got the title right again, Jeff. I'm rather proud of myself. Good to see you.
Congratulations, Tim.
Thank you very much. I like the metaphorical slap on the back. Nice to see you. I haven't seen you for a week. Do you know, and we've talked about this a little bit off air, and we're kind of wondering what's going on. What's the thrust of the week? What's the crux of the matter? And the crux is that not a lot's happened.
No, not a lot's happening. I think the big takeaway at the moment is the lack of clarity about where we're going. Because if you're going to make an investment decision, you need to be clear about what you're going to do and why you're going to do it and what are the factors driving it. At the moment, there really is one focus for global markets, and that is the conflict in the Middle East. Yeah. Now, that is affecting the world. It's only a local conflict, but it impacts everyone because of energy, because of crude oil and the flow of, forgive the pun, into global markets from this part of the world. And so we just don't know. I mean, myself, I normally am quite opinionated, as you know, and have a certain clarity, not always correct, but I do have a clarity. At the moment, frankly, I haven't got a clue because there are so many different factors that come back to what is going to happen. It really impacts everything and everyone and every country. The cost of oil is driving fears of inflation. It's not really there at the moment. The latest CPI data and PPI data out of the US was a little bit inflationary, but not much, considering energy prices pretty much doubled. So no, I think it's this lack of clarity is the main driver of the market, or lack of driver of the market. And the way to look at this, look at trading volumes, Tim. Trading volumes always revert back to the COMEX, to the CME, on their daily trading volume, because it's published, it's very accurate. Now, typically, you would have an average daily trading volume of around about 200,000 contracts. Right. Now, one contract is worth 100 ounces, so kind of do the maths. But that's average. What we had in January, when we were record after record, we had 400,000 contracts, 500,000 contracts, and pretty much an average of around 300 to 350,000. And that is really a healthy market. Lots of participation. We had an all-time record high of $5,602. And then February was quite busy. Then March, we really, since the start of the conflict, since that very beginning of the first kind of drone coming over this part of the world, markets have gone, taken a step back. Traders have stepped away from their trading desks. And we're having, so far in April, the average trading volume is 100,000 contracts. So that's half of the average, the normal of what you would expect. Why is that? Because we don't know. I think that lack of clarity is keeping people away from the market.
Well, it's interesting there. You said, and I quote, "I haven't got a clue." And I love the honesty there, because we just don't at the moment. I don't remember a time where you really can't predict in any way what the President of the United States may or may not do, may or may not be thinking. And so much is weighted on that, of course. That's so kind of central to every issue that we have. I mean, we've got, let me just quote your report this week. Here's what it was. Gold rebounded on Tuesday from a near 1 week low hit the day before as oil prices fell on hopes of further US Iran peace talks. Okay, so easing inflation fears. Gold prices rose yesterday on growing optimism over a potential deal. We've got news of a 10-day ceasefire, which is very welcome, of course, between Lebanon and Israel coming into effect. Oil prices down a little bit this morning, but gold has really been It's around about $80 a week. I have really struggled to find anything to say to you other than everything you've just said. It's uncertain time.
It is, and we have been hugging 4,800. I mean,
exactly.
I did actually make a point in the weekly, like forward-looking analysis that I expected another week of sideways trading, and if I remember correctly, the projected range was 4,600 to 4,900. Well, forget 46. It's more like 4,700 to 4,900. So there really isn't anything going on. Look, there's one thing that happens every day, Tim. I've asked you this question before. I wonder if you can remember. What happens every day in the gold market without fail?
Without fail? Well, at the moment, absolutely nothing.
No,
Say it again.
No, every day we have gold that is being produced is sold because a gold producer is in the business of mining, producing, and selling its gold. So that comes onto the market every day. You don't have to buy gold every day. You don't. You may buy gold because you like it, you think price is going up, or you're a jeweler. But a jeweler only has a turnaround in his inventory of 2 or 3 times in a year. So you don't necessarily have buying every day, but you do have selling. And it's at what level is the market willing to take that onto its books? And that's why you have traders. So you have producers and you have consumers. In the middle, you have traders, you have trading companies, you have bullion banks, and they warehouse the risk. Okay. Now, but they don't have to trade. So the only thing that happens every day of the year is that we get gold coming onto the market, and it depends at what level traders and speculators are willing to take that on. Now, normally there's a lot of clarity. Everyone involved in what we do, they know what they want to do. But at the moment, it's almost impossible. Going back a week or so, we had a very, very strong technical buy signal.
Yes.
Okay, we did. The moving average convergence and divergence indicator, it's where one moving average crosses up through the other one, a short one over a longer one, and so on. That was a very strong indicator. Okay, and the target was well above 5,000. It went nowhere. I mean, it's up $100. So it's really nothing. So bottom line is, we're not really going to go anywhere in terms of price until clarity enters the market. That clarity needs to come from President Trump. And of course, our experience in the last year and a half or 2 years is that there is no clarity. We just don't know what he's going to say next. So,
well, this is the thing.
And that's a problem.
Well, whatever you think of President Trump, you can't accuse him of being boring. That's that I certainly believe.
I think Pope Leo might have a different view, Tim.
That's going to be ongoing for a while. Remarkable statement. So let me ask you this then. So markets there is a bullish feeling. It's not translating into trading at the moment. There is a bullish feeling because there's the potential of a peace deal of sorts. That's being touted by President Trump. What would you expect to see if a lasting peace deal does come to fruition?
Yeah, I think that's where the buyers. I think where the buyers have been standing to one side, they come into the market. So I do think that a lasting peace deal, what it will do, Tim, it'll bring the U.S. economy back onto center stage. And it is the U.S. economy that largely drives the gold price. And by the economy, I mean interest rates in the U.S., which really dictate global interest rates. Certainly, with the peg on currencies in this part of the world, it really is. If the U.S. cuts interest rates, then we would cut interest rates and so on. So it is the impact of the U.S. economy on the gold market. Now, that was before the problems in the Gulf. there was expectations of 2 to 3 interest rate cuts in 2026.
Yeah.
Now, when we had oil prices at $115 a barrel, that suddenly became, maybe we're going to have an increase in interest rates, not a decrease in interest rates. And that has been the problem for gold. And that caused the sell-off to $4,100. And then we had stability come in, and we've been hovering between 4,600 and 4,900 for a period of time. If we have clarity, if the conflict is resolved and we get the US economy back center stage, then people will turn to the other big event that's going to happen in this first half of the year, and that is what is going to happen with Jerome Powell as chairman of the Federal Reserve, because he is due to leave office in May.
Yes.
Okay. But his successor still has not been confirmed by Congress, which it has to be. Now, Jerome Powell said the other day, as I read, that he's willing to stay on until they do either the current successor is approved or somebody else comes in. He will stay as governor of the Federal Reserve.
So you have to have a governor of the Federal Reserve. Right. Is that constitutional or statutory?
I think so, yeah.
Okay, right.
I don't know the American law, but against that, President Trump said this week, if he doesn't stand down, I'll sack him.
Okay.
So now, has the President of the United States got the power just to sack the governor, the leader of the US Central Bank? I don't think so, but you don't know. Fundamentally, I don't think President Trump will be happy until US interest rates are at 2%. I do believe that he's got that number in his mind. And a driver of that would be, again, asking a question, who is the biggest borrower of US dollars in the world? It is the US government.
It is, yeah.
And so the debt, the national debt just gets bigger and bigger and bigger. It has to be funded. If you've got interest rates of 5%, very difficult. If those interest rates are 2%, that takes a lot of the burden of servicing that debt away. And I do believe President Trump fundamentally believes that. And I don't know that it's such a bad concept, but one thing's for sure, interest rates at 2% means there is no real opportunity cost of holding gold.
Okay.
Okay, then people would say, okay, I've got this gold, so what can I do with my money? If I leave it in the bank, I get 2%. You know, gold has doubled in price in the last 2 years. So therefore, where should I put my money? Into gold. This is why my fundamental view of the market this year is that interest rates will eventually head down once conflict in the Middle East is resolved, which I honestly believe we're very close to that. And when we get the focus back on the US economy and the potential for lower interest rates, bullish for gold.
Okay, so that's the world according to Jeff Rhodes.
Yes, sorry for the rant.
No, I'm following it, and it makes sense. The issue is, and this is again from one of your reports, I think this was maybe Wednesday, in the US, and it jumped out because the figure's quite odd. Traders now see a 29% chance of a 25 basis point interest rate cut this year, so 0.25%. Before the conflict, most people were like, there's going to be two reductions, maybe there'll be three.
I think it was, for 25 basis points, I think you would have had 100%. 50 basis points, 75, and then 75 basis points, probably 50-50.
Yeah.
But that turned into plus, I think it was about 30% view that we're going to have a rate hike. Now, the US economy doesn't really point. When you see some numbers, recent figures have been quite negative about the US economy. It is not flourishing.
No.
It is not flourishing. Therefore, they do probably need a cut or two. But as I say, if President Trump gets his way, just remember this number, 2%. I'm sure. It's not as though I know President Trump, but I've certainly read from his first time in office, he liked that number 2%. And listen, I like it as well, because if you've got much lower dollar interest rates, you have lower interest rates here, guess what? Your mortgage becomes cheaper. And not just in the UK, around the world. So low interest rates is actually very positive for the global economy.
Well, let's hope so, because the global economy needs something at the moment, doesn't it? So that's the gold situation. Not lots to talk about, but not really much to report over the course of
lots
this
to talk
really.
about. Yeah, absolutely. But
it's a hard one. Silver.
Like silver's hovering around that $80 level.
Yeah.
So although it's disappointing, because what was the high? It was 120. What was it? $115. I can't remember.
116. I think,
something
around
like that. Yeah. Now we're all disappointed, but just go back 2 years, and we were languishing around $25 to $30. So I think it's doing really well, and the outlook. And there was a meeting in New York this week of the World Silver Institute, and the outcome of that and the consensus was that we've got another year of deficits in silver. So it means that more silver is being consumed every year than produced, which is obviously bullish. We've normally seen silver lease rates at 0, but over the last 3 months we saw them at much higher, very expensive, and lease rate on silver is still around 3% per annum, which is quite high for silver. So the fundamental outlook for silver remains bullish. Okay, we may see a bit of trading between 70 and 80, even 60 and 80, but by the end of this year, I think we'll be well established above $100, because that's what the physical demand versus supply numbers tell us, that we will be going higher. It's difficult for silver to go up when gold isn't. You just need the sentiment generally to be bullish in the precious metal sector. Look, silver's holding well. Platinum is solid. It's holding around 2,000, 2,100. For me, that's probably got the most upside, to be honest with you, and palladium as well. But the industrial precious metals have got a lot more going for them from physical demand. I do think that the global economy will come out of the issues with respect to higher energy costs. I think we'll be back to normal. That would be very supportive for the global economy. That in itself means much higher prices in silver and platinum. I always avoid palladium, because whatever I say, it goes wrong. So, but basically that looks good as well. But I just wouldn't nail my colours to the mast on palladium.
Well, let's keep our fingers crossed, everything crossed, for some kind of notification of a peace deal soon, because around about 4,800 all this week for gold, around about the 80 mark for silver. Let's hope for some change next week. You know, there was a phrase, one of our guests this week has used this phrase, so this one, it's not trademarked yet, we can all use it. Where we are now is in a state of decision paralysis.
Ooh,
good, that, isn't it?
I
thought you'd like that.
That is that's almost as good as contango.
Oh, so I tell you what, we've got literally seconds. Decision paralysis. Remember, cautiously optimistic about 10 years ago? That was the phrase all the time. People don't use it now because it's a little bit. No, I learned something from your terminology of the day this week. Ruthenium. I didn't know ruthenium was an element.
It's a PGM. It's a platinum group metal.
Platinum group metal. Okay. Yeah. Specific gravity 12.20. Melting point 2,500 degrees centigrade. Chemical symbol Ru.
Yeah, absolutely.
I tell you, the world according to Jeff Rhodes has changed my life. I learn.
Absolutely.
And as always, look, Jeff Rhodes, he is, let me get this exactly right once again, Managing Director, Business Development, Middle East and Asia, Monetary Metals. Always a pleasure.
Thank you, Tim.
Thank you very much. It's Mirror Business FM.